I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
We're hearing some insane talk now about the Dow Index. It opened over 26,000, dropped a bit after that. But some people now are floating incredible figures like 30,000 or even 40,000. What's your feeling on that?
Yeah, well, I think this is a little extreme to the upside, but anything is possible. The question is, what are valuations of stocks going to be once the market gets to those crazy levels? Valuations are already really high. Doesn't mean the markets have to follow valuations. Of course, they don't. And fundamentals usually kind of can they cut both ways. The market doesn't care about fundamentals in the grand scheme of things when it comes to valuations. Right now, you look at the chart, the last more or less 4 months on the Dow, it's just huge green up bars. It's just 1 month rally after another. It's starting to go parabolic, and when something goes straight up, usually it's going to come straight back down and give back most, if not all, of that recent rally. And this is what we've been talking about over the last few interviews that we've done, is that we're in this parabolic, euphoric kind of stage where everyone is piling in. And I think this is a new bull market. It's been in place for 9 years. It's a long bull market, and there's a lot of traders and investors who have never experienced a bear market in their life, and they don't know what's coming, and it's going to catch a lot of people off guard. But these valuations, Dow 30,000, maybe it will be reached. Maybe we're going to see a couple more big up months, and boom, we tag it. But it's a great opportunity short term here, but these are very scary price action that's happening in the markets because it ends in a very quick and violent way, and it's very hard to get out of the way in time before it's too late.
Well, China and Japan have stopped buying U.S. treasuries. Japan easing up on its plan to buy equities. What's that going to do to the stock markets?
I don't know exactly what it'll do to the markets. I just feel as though right now we're just seeing money continue to pile into equities, and it seems to be the play. Everything is going into equities. There's not a whole lot of interest in bonds. So right now the hot play is everything is kind of piling into the equities here, and it's just creating this rip to the upside that's going to catch a lot of people off guard.
Of course, we had a Black Friday 2 years ago, January 25th, and a quick look here. Well, we have a Thursday, the 25th. Do you think we're going to see a 10-15% correction in the near future?
I feel as though we're going to see like a 4 or 6% correction in the market fairly soon. The way the price charts are forming, like the Dow here, you look over the last year more or less, it's just month after month going higher, and it's parabolic. This does lead to some pretty severe moves, and I wouldn't be surprised if we saw a 10 or 15% move. But right now, the markets are still screaming to the upside. I think things are going to get weak over the next 1 to 2 weeks here. We've got cycles starting to top out next week. We've got sentiment is starting to change. We're starting to see indicators that money is starting to show a little bit of fear. So we're seeing some smart money, early money starting to hedge and protect. And even though prices are moving higher, and that's usually an early warning sign that we're going to get some type of correction. And I do feel as though over the next 2 weeks, we're going to see a deeper correction that is deeper than what we've seen the last several months, because really the markets haven't corrected in months. We just see a little tiny pause, and then it keeps going higher. And we need something to cleanse this market if it wants to have a sustainable rally here. But at this point, it needs a lot of correction and consolidation here to stabilize the markets for the amount of run that it's had already.
Is the volatility of money picking up?
The volatility of money, I'm not sure what you mean with that, but do you mean price volatility of the actual markets, or?
Well, are we just seeing more people moving stuff around rapidly?
Yeah, I'm not sure. I don't really follow that so much, so I'm not sure if money is jumping around more so. It feels as though money is piling into the big brand name stocks. Volatility is really low. So we don't get a lot of day trading going on, people jumping around and doing all kinds of trades like that at this point. But as price is very soon going to become much more unstable. We're going to start seeing big price gaps, large intraday swings back and forth, and that's when we're going to see a lot of money starting to jump around and get day traders, and automated systems will start to kick in. But we need to see volatility pick up, and we need to see more volume. It's in the market.
We'll have more with Chris Vermeulen right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening with the U.S. dollar?
Yeah, the U.S. dollar's been, obviously interest rates are playing a role here. U.S. dollar has been tanking, and we're making some new lows. And when you look at the U.S. dollar index and you look at the monthly chart, it's pretty scary where the U.S. dollar could go from here. Right now, it is pulling back to a very critical support zone, which is around this 90 level mark, which was a high back in 2009, and it was more or less tagged again in 2010 and several other points back in 2005. So it's a very critical pivot point. When the market hits this, it either gets rejected and it'll bounce back up from here in a strong way. If it breaks and closes below this level, we could see the U.S. dollar fall all the way back down to about the $82 mark, which is a pretty substantial drop. If that happens, we're probably going to see commodities and precious metals really take off, and that in a way that would kind of kickstart what I would think would be the topping phase in the equities market for a couple of different reasons. First of all, usually we see commodities start to firm up and do really well at the end of a bull market, and commodities they're as a basket in general, they're starting to move up. Crude oil is moving up. Precious metals are firming up in a basing formation. So a weaker dollar would kind of definitely have a upward bias in commodities and confirm that, okay, we do have stronger commodities at this point. And another reason why this could signal a top in the equities is that if the U.S. dollar value is falling, savvy investors are going to have to start to take into account that, the currency could drop 15% in value here. So while your stock might move up 15%, the currency you're holding it in could drop 15%. And if the currency you're holding investments in starts to drop, it's definitely killing your potential returns on the upside, and it could get people to move into different potential asset classes or into commodities, get out of the equities. So it's going to create a shift here depending what happens with the dollar over the next month or so. And this is kind of where we're teetering with crude oil as well. We're at a major turning point for a lot of different asset classes, and these are looking at a monthly chart. So these aren't things that are going to happen this week or next week in general. These are larger patterns that are going to last multiple months. but we do need to see where prices are going to close at the end of this month to kind of confirm whether things are kicking off to a bullish bias or a bearish bias, depending on the asset class.
We'll have more with Chris Vermeulen right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. The price of crude dropped slightly today. It's still pretty high considering what time of year we're in. What do you see happening with oil?
Yeah, well, crude oil it's starting to more or less get a little exhausted in the move. We had a nice rally up to the $62 per barrel mark. It traded sideways there for about a week, and then last week, more or less, we saw crude oil pop and break out above that level, and here we are kind of lingering around this $63, $64 per barrel mark. And in the last three trading sessions, we've just started to see crude oil show a little bit of price volatility, meaning we see price run up one day, and in the same day it sells right back down near the low of the day. The following day it has a sell-off and then rallies back up. And then today it gaps higher, pushes up to a new multi-year high, and then sells off again on heavy volume. So we're getting to a level here where that upward bias and that excitement from investors piling into crude oil, that is starting to stall out. There's traders in there starting to unload positions and sell and potentially take short positions. So right now it's in that struggle of the bulls and bears. It's losing momentum, and the question is it going to roll over here or not? And crude oil, if it can hold above $62 per barrel this month, I think it would be considered a new bull market for crude oil, because it's a pretty significant line in the sand going back a few years of a major basing formation that has formed. And if it holds up above that, then crude oil could be off to the races. We could be looking at about $80 per barrel, and it's a great opportunity to the long side. Now, if crude oil sells off here by the end of January, closes below $62 per barrel on a continuous contract, then it might be kind of lights out, and we might see a fairly significant pullback in crude oil back down to around the $55, $54 per barrel mark. So there's a potential $10 drop in crude oil if it starts to reverse by the end of this week.
Now that's quite a change. You either go up to 80 or drop down to 50. Some people feel if it does crack, it could even fall down to 30.
Well, yeah, and if you look further, the charts definitely point to that, and we might have even touched on that last time we spoke. Crude oil, if it breaks down, could actually have a very big washout. I think I had a level down around 37.50 is where I think it could potentially wash out to, but I don't see it selling off to that point, not yet. It all depends on if it reverses down here, it sells off. If it drops down to that $54 per barrel mark, how does it consolidate from that level of support? Does it bounce? Does it trade sideways for a while? And then from there, we can measure where the next downside leg would be. But I don't see one leg going all the way down there. So it'd be a process and kind of a running, moving target. But there is potential on the long-term charts when you look at crude oil that it could definitely have a very big collapse. And if the equities markets roll over and the economy starts to roll over, I have no doubt crude oil will eventually roll over as well, and we could very easily test that $30 per barrel mark in the lows that we saw back in 2015, 16. So it's not out of the picture, but it's a ways away, and there's a lot of analysis and changing that can happen between here and there.
And of course, there's the unrest in Iran that would tend to boost the price of oil, wouldn't it?
Yeah, you'd think it should help prices continue to rise up, but right now the main thing to me, I think, with crude oil, more so than news, is simply the falling dollar, the excitement based around crude oil and investors right now, because it is making multi-year highs. It's broken above a resistance level. So there's a lot of excitement and traders and investors piling in. And so right now, I think that is carrying the momentum and holding price up. It's just a trickle stream of traders and investors buying into crude oil. But we'll see if that kind of media and hype and excitement can hold the price up into the close of the month, or if it'll get sold into and close back down.
What's this going to do with the price of gold?
Well, a lot of it's going to play on what's going on with the U.S. dollar index. Gold, silver miners, they're holding up really well. They're in a multi-year basing formation from 2013. If they break out, we're going to see a really nice run. It really depends on kind of what triggers the next massive sell-off in equities, because I think until we see a lot of fear in the market, gold I don't think is going to really explode. And depending on the type of fear that it is, gold could be, could have a lot more potential upside. And overall, gold is in this kind of consolidation phase. I think gold could trade sideways or slightly lower here over the next few weeks, with the dollar still selling off and being under pressure. And once it finds a bottom here, in the next week or so, or over the next few sessions, I think gold will continue just to consolidate. Gold is kind of stabilizing in this big range. I think it could trade still between 1100 or 1100 or so up to around the 1300 mark, the 1400 mark. But it's in this consolidation mode. It's very strong. Lots of volume moving into gold, and it's kind of become something that I think we're looking at. Investors are starting to buy and hold again, which is what we kind of want to see, are some investors buying and holding price up. Just the way that gold has been moving along with silver, it is very bullish price action, and the price action is pointing to, if any selling comes in, there are buyers there. They are now in an uptrend, so dips are being bought in gold. And so we are looking for a little dip or consolidation in gold here as the dollar potentially finds a bottom and has a bounce. And then after that, I think we could see the gold continue to break out and start a bull market later this year.
What about the other precious metals? I know that platinum and palladium had some pretty good plays. Anything happening there still?
They're. If we take a look at the precious metals and those ones there, palladium has been on a tear. It's been moving up very nicely, really all of last year. It is trading at multi-year highs. Platinum, on the other hand, is building very much basing formation, just like gold and silver. It's kind of flatlining, trading sideways, and it looks like it's getting ready for a breakout to the upside. Very similar to gold and silver, and I think platinum, silver, and gold will kind of break out and rally together as we've seen in the past. So I like those three. Palladium, on the other hand, you look at the big picture, palladium has moved up to a high that we saw back in 2000, 2001, and it is arguably putting in a major double top, and we could see a very sharp correction after this month. So I think it's overdone. It's at major resistance. It's had a parabolic rise. I'd be looking for a 1 or 3 month pullback in palladium from this point before potentially looking to get long in that again.
Is one of the reasons why palladium is hot is that China has now mandated strict pollution controls for their vehicles?
I'm not sure, to be honest. Is that with the catalytic converters and all that stuff? I'm not too sure. Yeah. So it could play a role. Obviously, tons of vehicles over there. So I'm not sure. I don't follow that, but it could be a role.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.